Nvidia sell-off. Is the stock overvalued? Insiders sold $80 million after earnings. Here are 8 main highlights. 1. Nvidia sell-off, largest insiders selling since 2023. 2. How Nvidia became a dominant force in the chip-making industry. 3. Nvidia efforts to stay ahead of the game. 4. Here are 4 risks that could take down Nvidia's AI's leadership. 5. Here are 3 growth factors for Nvidia going forward. 6. Is Nvidia stock overvalued? 7. Analysts on Nvidia's price prediction. Now let's dive in. Earlier this month, Nvidia CEO Jensen Huang was asked by a fan to autograph her chest, a moment that might signal the growing hype around the chip maker is reaching unsustainable levels. Nvidia's computer chips, which are particularly well suited for AI applications, have driven the company to unprecedented profitability in recent years. Nvidia briefly became the world's most valuable company before a sell-off, and now ranks as the world's 3rd most valuable company, with a market capitalization of $3.1 trillion, trailing only Microsoft and Apple. Nvidia sell-off, largest insiders selling since 2023. The sell-off was fueled by concerns that Nvidia's valuation might be inflated. Deutsche Bank strategist Jim Reed recently cautioned about signs of over-exuberance surrounding Nvidia, and some of the company's executives have sold portions of their stock. On February 2024, following Nvidia's impressive earnings report, which propelled its shares to new record highs, company insiders increased their stock sales. According to the website Form 4 filings, directors at the Santa Clara, California-based chipmaker sold about 99,000 shares valued at approximately $80 million at the time of the transactions. This marks the largest insider stock sale at Nvidia in a month since 2023, when 237,500 shares were sold, based on data from the Washington service. The race of AI is still in very early stages, said Daniel Newman, CEO of tech research firm The Futurum Group. But everyone who has been building AI up to this point has likely done some of their most significant work on Nvidia. Nvidia's stock performance reflects this enthusiasm. The company is part of the Magnificent 7 tech stocks that fueled much of last year's market growth, with shares up nearly 155% since January as of Wednesday's market close. However, Nvidia's future growth hinges on ongoing AI advancements and the pace at which businesses adopt these technologies. So, how did Nvidia become a dominant force in the chip-making industry? Nvidia has long been renowned as the leading manufacturer of graphics cards for gaming, but its graphics processing units, GPUs, the core of those cards, found a broader audience with the rise of cryptocurrency mining. This process, which involves solving complex mathematical problems to generate new cryptocurrency, benefited greatly from Nvidia's GPUs. Nvidia's GPUs excel at parallel processing, which involves breaking down complex computations into smaller tasks that can be handled simultaneously by thousands of processor cores. This approach is far more efficient than traditional computing methods. As it turns out, generative AI also heavily relies on parallel processing. For example, when you interact with ChatGPT, the AI model must analyze vast datasets, the extensive collection of online text-based content up to its last update, to generate responses in real time. Scaling this process to meet the needs of companies like OpenAI requires extensive parallel processing, often conducted at data centers equipped with thousands of GPUs. Nvidia recognized the potential of this technology shift early on. CEO Jensen Huang has described 2018 as a pivotal bet the company moment when Nvidia reimagined the GPU for AI applications, long before the emergence of tools like ChatGPT. The company strategically aligned its research, development, and acquisition strategies to capitalize on the coming AI boom. They were playing the game when nobody else was, said Daniel Newman, CEO of the Futurum Group. Nvidia's efforts to stay ahead of the game. Currently, Nvidia seems poised to continue creating value, backed by its dominance in a leading industry, an impressive customer base, substantial cash reserves, keen strategic insight, and a proven track record of innovation. These strengths position the company well for long-term growth. Nvidia remains ahead of many competitors and continues to launch groundbreaking projects, such as the following. Nvidia introduced generative AI models and NIM microservices for OpenUSD, enhancing workflows and accelerating the development of industrial digital twins and robotics. Major Taiwanese electronics manufacturers are using Nvidia's reference workflow combining Metropolis Vision AI, Omniverse simulation, and Isaac AI robot development to create more autonomous factories. Leading companies in robotics, such as BYD Electronics, Siemens, and Teradyne Robotics, are adopting Nvidia's Isaac robotics platform for research, development, and production. Nvidia announced Omniverse Cloud Sensor RTX microservices to enable physically accurate sensor simulation, expediting the development of autonomous machines. Additionally, Nvidia won the Autonomous Grand Challenge at the Computer Vision and Pattern Recognition Conference for its advances in building physical, generative AI applications for autonomous vehicle development. These initiatives underscore Nvidia's leadership in AI and its capacity to drive innovation, making sure they stay ahead of the game. There are 4 risks to monitor that could take down Nvidia's AI's leadership. 1. Market volatility. The technology sector is inherently volatile, with stock prices often swinging due to factors unrelated to a company's core business. This risk is amplified in the AI space, where potential issues like hallucinations could generate negative headlines. 2. Competition. A $100 billion market opportunity inevitably attracts fierce competition. Nvidia currently leads the AI chip market, but competition is expected to intensify over the next 5 years. The closest rivals today are AMD and Intel. Cloud providers like Microsoft, Alphabet, and Amazon, who are also Nvidia's customers, pose another threat as they develop their own AI chip solutions. While their chip production efforts are still in the early stages and small compared to Nvidia, they could eventually reduce their reliance on Nvidia's products. 3. Innovation uncertainty. Developing new products requires strategic foresight and careful resource allocation, but there's always the risk of investing in initiatives that fail to meet expectations. 4. US sanctions on chip sales to China. The first round of sanctions were imposed in 2022, and updated in 2023, for high-performance chips, and have already impacted Nvidia. In response, Nvidia developed lower-performance, compliant chips, but demand for these in China has been sluggish. Chinese sales accounted for 17% of Nvidia's fiscal 2024 revenue. According to Chinese research firm CCID Consulting, China is projected to represent 30% of the global AI market by 2035. Therefore, if more sanctions are imposed in the future, it could slow down Nvidia's progress in China, which will become one of the main AI regions of the world. There are 3 growth factors for Nvidia going forward. 1. The Blackwell GPU architecture features several innovations designed to reduce the energy consumption involved in developing, training, and deploying large language models. According to Nvidia, the platform can cut costs and energy usage by up to 25 times. Despite a delayed launch due to a design flaw, Meta Platforms, Alphabet, and Microsoft are reportedly set to place Blackwell orders worth tens of billions of dollars. 2. Government demand. Forbes senior contributor Peter Cohan suggests that governments will ramp up investments in high-performance GPUs to build their own large language models, tailored to their specific languages and data. 3. Nvidia's hardware enables data centers to optimize utilization by supporting generative AI and 5G applications. As computing demand rises, maximizing efficiency and utilization will remain a top priority in data centers. Is Nvidia, tick, NVDA stock, overvalued? Nvidia has been a standout performer since 2023, driven by strong demand for its enterprise AI solutions. Following the company's report of triple-digit sales and earnings growth in the first quarter of fiscal 2025, investors are keen to gauge how far NVDA stock could climb over the next 5 years. The AI chip market is projected to reach $311 billion by 2029, with a compound annual growth rate of 20.4% from 2024, according to Markets and Markets. If Nvidia's data center sales maintain their current annual run rate of around $90 billion, this growth rate would push AI-related sales to over $225 billion by 2029. This potential surge in sales could support another doubling of Nvidia's stock price by 2029, assuming profit margins remain stable. Given these factors, it's not unreasonable to expect Nvidia's market cap to double to $6 trillion in the next 5 years, a conservative estimate compared to others. Beth Kindig of the IO Fund, for instance, anticipates Nvidia reaching a $10 trillion market cap by 2030. Analysts on Nvidia's price prediction. Expectations for Nvidia remain high despite recent challenges. JP Morgan analyst Harlan Sur noted that the 2-month delay in Blackwell GPU shipments is unlikely to impact Nvidia's overall revenue outlook, as strong performance from the Hopper line compensates for the delay. We expect gross margins to improve throughout next year, with Nvidia maintaining a strong lead over competitors thanks to its aggressive product launch schedule, said Saw, who raised his price target for Nvidia by $40 to $155 per share. Cantor Fitzgerald analyst CJ Muse, who reaffirmed his $175 price target and overweight rating on Nvidia, dismissed concerns over the Blackwell delay as insignificant, especially considering it precedes what he described as one of the toughest product cycles in Nvidia's history. We see no change in the AI narrative supporting Nvidia and believe today's potential pullback is simply another buying opportunity, Muse added. Piper Sandler analyst Harsh Kumar shared a similar outlook, upholding his $140 price target and overweight rating following the recent earnings report. Likewise, Bernstein analyst Stacy Rasgon raised his Nvidia price target to $150 per share, highlighting the company's strong data center growth and the expected boost from Blackwell revenue in Q4 as evidence of Nvidia's ability to exceed high expectations. Bottom line, while Nvidia's value could double or even triple in the coming years, it won't be without challenges, and it is crucial to not overlook all the factors we have mentioned as risks for the company. Some analysts predict that the AI boom could taper off, potentially dragging Nvidia's stock down. While demand for AI chips might cool slightly, the AI revolution ensures that overall demand will remain high. Key considerations include competition, regulatory sanctions, and unexpected hurdles Nvidia might face. Despite these risks, Nvidia remains ahead of many competitors and continues to launch groundbreaking projects. Additionally, Nvidia won the Autonomous Grand Challenge at the Computer Vision and Pattern Recognition Conference for its advances in building physical, generative, AI, applications for autonomous vehicle development, which will be the next chapter of AI revolution, and shows that Nvidia is already leading the way in this sector. These initiatives underscore Nvidia's leadership in AI and its capacity to drive innovation, despite the competitive and regulatory landscape. Well, Nvidia and AI to the moon, just because we like it. Thanks for watching, good luck and good profit. Please read the disclaimer in the description below. You can support the channel by subscribing and turning on notifications. Let's grow the channel together.